Greetings, everybody. Welcome to Liberty Call. Today is Monday, April 3rd, 2023. Hope everybody's having a fantastical day out there in the interwebs. Hope you had a good weekend. For myself, got to watch some basketball. The semifinals were pretty good games. And Astros played 4 games over the weekend, split the series with the hated White Sox. I used to like the White Sox until 2005 when they beat the Astros in the World Series. The reason being is my family's from Chicago, from the South Side. And, me being a first generation Texan, I have my loyalties to the Astros and my Houston teams, but I do like my Chicago teams, the Bears, the Cubs, the White Sox, Blackhawks when they're good. But never really a Bulls fan. I mean, I liked Michael Jordan back in the day. He was, the GOAT of all time. But anyways, you didn't come here to hear me talk about sports, did you? You see Jake back here? He is super excited because when we're done with this, we're going to go on a walk. And I can't say it too loud because he gets all too excited. But when we go on a walk, he loves it. We had the first walk of the season this year yesterday because the snow had finally melted off the trails out in the back of my neighborhood. And, it wasn't too cold. It was like 60 something degrees. Right now it's 58. I was actually wearing shorts and a t-shirt yesterday, but I got sweats on today because we're going to go for that walk in a little bit. And, I don't want to get a chill. Anyways. All right. If it's your first time watching Liberty Call, please thumbs up. Give me some likes. Give me some shares. Give me some subscribes, follows. That follow button or subscribe button that's down here, or maybe it's up here or over there. Click it. You want to get my valuable information that I put together on a daily basis for all the dozens of people who watch this on a regular basis. So not so much on YouTube, but Rumble gets quite a few views, which I'm very, very happy about. If you're watching on Rumble, put a comment down in the bottom. I just want to know that who's watching this. So anyways, all right, let's go ahead and jump into the numbers. Things, it's kind of a mixed day here domestically. The Dow Jones was up 0.98% or 327 points, closed at 33,601. S&P 500 was up 0.35, closed at 4123. NASDAQ was down 0.27%, closed at 189. My dyslexia is jumping in. Most of the day, the Dow was, 1% or more up. The S&P 500 was kind of hugging that plus minus line, right around zero. And then the NASDAQ was as bad as 1% down at its worst during the day. But, it looks like it turned it around. The VIX fell 0.75% today. It's currently at 18.56. Canada was up 0.89. Brazil down 0.37. Mexico down, or basically flat at down 0.01. Over in Europe earlier today, Germany was down 0.31, UK up 0.54, France up 0.32, Netherlands up 0.29, Spain down 0.81, Italy up 0.24, Switzerland down 0.12, and Portugal up 0.53. Over in Russia, the exchanges were mixed. The MOEX up 0.92, the RTSI down 0.8. And the overnights in Asia, mostly green. Starting out with the Nikkei in Japan, it was up 0.52. Australia up 0.63. New Zealand down 0.12. Chinese markets, mostly green. Shanghai up 0.72. The Shenzhen component up 1.39. China A50 down 0.16. DJ Shanghai up 0.83. Hang Seng up 0.87. And the Taiwan weighted up 0.12%. All right, well, that was all of the markets for trading day 4-3. So let's go ahead and jump on over to the weekly economic update. Little new format for those of you who are on my mailing list, who are clients. And so it looks a little bit different. My vendor has changed how they send this out to me. So that's just kind of how it is. So let me switch that. All right. Stocks rallied last week on receding fears of a widening banking crisis led by resurging investor interest in technology and communication services names. The Dow Jones Industrial Average gained 3.22. The S&P 500 was up 3.48. NASDAQ rose 3.37. And internationals were up 3.34%. All right. Tech leads rally. In absence of further bad news in the banking sector, made for a good week with high-quality technology and communication services stocks leading the market. While easing banking worries laid the groundwork for the week's positive gains, growing conviction that the Fed rate hikes were ending and positive inflation data out of Europe helped support the renewed enthusiasm for stocks. Again, I don't think Chairman Powell is going to waver. I could be wrong. He could be just fooling me. But, I think if he was going to waver, he probably would have done it by now. Again, he could turn chicken shit and, turn yellow and, drop rates back to zero and create a bunch of money. But I don't see it right now. But again, things can change. Encouraging inflation data and on the domestic front on Friday also added to gathering optimism, igniting further gains to cap a satisfying week for investors. Inflation grinds lower. In otherwise news-light week, Friday saw the release of February's personal income and outlays report, which provided insight into inflation and consumer expenditures, the dominant contributor to economic growth. The PCE price index, the Fed's preferred measure of inflation, rose 0.3% for the month, below market expectations and below the prior month's 0.6% jump. The year-over-year increase of 5% improved from January's rise of 5.3%. Energy prices declined, partially offsetting increases in food, goods, and services. Personal income rose 0.3%, while consumer spending increased 0.2%. We covered that on Friday. Were you here? Were you watching? All right. Economic data coming out this week. On Monday, we have the ISM Manufacturing Index. Tuesday, we have factory orders and the job openings and labor turnover survey. The Wednesday, we have the ADP employment report and the Institute for Supply Management Services Index. Thursday, jobless claims, and Friday, the employment situation. Just two companies reporting earnings this week, or at least big companies. Wednesday, we have Conagra Brands, and Thursday, we have Constellation Brands. All right. Well, that was everything for the weekly update. There's a few little other things in here. Again, the format looks a little different. A quote from Mike Obama. Yeah, I'm not a fan. Also, some IRS information, some healthy living tips, a riddle, and a photo. And on some of these, there's recipes, but not on this one. All right. Let's go ahead and jump on over to today's market recap. SP 500 advances as energy rallies, tech pairs some losses. On Monday, the SP 500 saw a choppy trade with energy stocks surging on the back of higher oil prices and tech stocks cutting losses. Yeah, commodities really jumped over the weekend. If I can stop here. Oil, gas, gold, silver. I mean, everything was jumping. So let's see what commodities are at right now. WTI is back up over 80. Brent oil's at just under 85. Gold settled at 2001 an ounce. Silver's up to 24. So yeah, I mean, things were jumping today. So, all right, let me get back into it. Energy stocks climbed after the OPEC Plus alliance unexpectedly decided to cut oil production by 1 million barrels a day. The move is expected to help balance crude supply amid uncertainty surrounding the macroeconomic impact on oil demand following the recent bank turmoil. Stocks that gained included APA Corporation, ConocoPhillips, and Marathon Oil Corporation, the latter being up over 9%. Meanwhile, tech stocks, which rose about 20% in Q1, traded slightly below the flat line after being off their worst levels of the day. Bargain-seeking investors were attracted by the intraday dip. Companies such as Microsoft and Alphabet cut their losses, while chip stocks also bounced back. Tesla, however, was the drag on the market, falling more than 6% after reporting total deliveries of 422,900 for Q1, surpassing estimates of 421,500. Following price cuts that boosted demand. Wedbush said the impact of the price cuts on margins would come under close scrutiny, and the key threshold of auto GM north of 20% will remain critical in the coming quarters. On the economic front, U.S. manufacturing activity fell short of economic estimates, with the ISM manufacturing PMI falling to 46.3 in March from 47.7 a month earlier. However, Jeffries noted some positive aspects, such as ongoing signs of disinflation in goods and the prices paid index falling to 49.2 from 51.3, which shows that the disinflationary trend in the goods sector remains intact. In deal news, the merger between World Wrestling Entertainment and the UFC was confirmed, creating a combat sports company controlled by parent company Endeavor. The deal valued WWE at $9.3 billion and UFC at $12.1 billion. Wow. it's a lot of money just to, well, one of them's fake fighting and the other is real fighting. So, all right, next up on the docket comes from our friends over at First Trust, Brian Westbury, their chief economist. The article is titled Still Bearish. And let's see what he had to say. The S&P 500 rose 7% in the first quarter of 23, and preliminary data suggests that real GDP grew at a rate of about 2% in the same period. However, the forecast for a drop in stocks and a recession remains unchanged, using corporate profits for the fourth quarter and the current 3.5% yield on the 10-year Treasury note. The capitalized profit model suggests that the fair value of the S&P 500 is $38.91, which is lower than the current stock market value. Where are we at today? Let me flip back. 41.24. All right. So we're what? How much over? Where was I? 38. About 300 points. About 10%, I guess. Let's see here. The U.S. economy is still absorbing the 40% surge in M2, measure of the money supply, during COVID, which is analogous to installing a furnace built for a 10,000 square foot mansion into a 2,000 square foot home and running it on full blast. Even though the Federal Reserve has turned off the money supply furnace, the economy will take time to cool down. Eventually, the cooling economy will lead to a drop in profits, which were artificially boosted by easy money and government handouts. This drop in profits will cause the capitalized profit model to lower the fair value of stocks unless interest rates fall at the same time. Again, everyone's clamoring we need lower interest rates. That is why, because in the valuation models, lower interest rates, give you higher perceived profits in the future or higher valuations out in the future. The higher the interest rates are today, it lowers that future valuation down further. So it's kind of an inverse relationship. Currently, the stock market is priced for both multiple expansion and higher profits, which is unlikely. The Fed and federal banking regulators have ring-fenced the banking system to prevent losses for depositors, which means that future rate hikes will likely exceed current expectations and long-term interest rates will move higher. The historical increase in the money supply is the best explanation for the 40-year highs in inflation, and the sudden decline in M2 measure of money will hit the economy soon. This drop in activity will take businesses and investors by surprise, leading to more layoffs, lower profits, and lower stock prices. COVID-related shutdowns were a catastrophe for the U.S. economy, and the policy measures taken to ease the pain of the shutdowns were unprecedented. Now these policies are wearing off, and the period of economic and financial pain is expected. The timing of this pain is difficult to forecast, but it is expected to occur eventually. The market is currently having a hard time digesting or believing this forecast for 2023. Yeah, like I've said before, I was complaining about this 3 years ago when they started all this stimulus crap. I'm like, this is going to lead to more inflation. We're going to have big problems. And then they just went nuts. I think they created $1 or $2 trillion back in 08 and 09, when all that stuff was the mortgage crises were such a mess. But this is unprecedented. And that was a very good analogy that what's his name? Brian Westbury said, as far as, having a furnace for a 10,000 square foot house and installing it in a 2,000 square foot house and turning it on high and then expecting it to just cool off really fast. All right, one last article here. This move lets you insure $1.5 million or more at a single bank, with all the news of FDIC limits. And when I started in this business, the FDIC limit was only $100,000 per account. And, after the banking crisis we had back, 15 or 13 years ago, or I guess about 14 years ago, they bumped it up to $250,000. But I'm going to skip down to actually the meat of this article. Let's see here. How to keep over $1 million insured at a single bank. Should the average depositor care? Maybe not. As of 2019, the median account balance for the U.S. was well under the insurance limit at $5,300, according to the Federal Reserve. But what if you got a large retirement cash deposit to cover a year or more of living expenses, or if you have six figures in individual retirement account invested at a bank in certificates of deposit? Luckily, the FDIC covers up to $250,000 per depositor, per bank, per account category. In other words, you can keep well over $250,000 at a single bank and still be protected by FDIC insurance, provided the money is spread across different categories, account categories. So, and these are the account categories: single accounts owned by one owner, joint accounts owned by two or more people, certain retirement accounts, including IRAs, revocable trust accounts, irrevocable trust accounts, corporations, partnerships, and unincorporated association accounts, and employee benefit plan accounts and government accounts. And so, what you could do is you could have a individual account, and then you could then have a joint account, and those would be two separate things. And then have a deposit account, like your savings account. And then, so if it's joint, you can then have another $500,000. So like in this scenario, if you have a joint checking account, husband and wife, you can have $500,000 in there. You have a joint savings account, you could have $500,000 in there. And then each of you have an IRA up to, well, again, it would have to be in cash or CDs. If it's invested in securities, those aren't protected. So, I and my wife have an IRA, so then that would total up to $1.5 million. So again, there are ways to weasel around the way the rules or skirt the rules to take more advantage of the system. But, if it all comes crashing down, who knows what the future of banking may look like. I personally like sound banking, where they don't give away all the money that's in the bank. And, if you come in and you need your $20,000, they can, just hand it to you. So, alrighty, well, that's everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. I hope everyone has a fantastical evening, and I'll talk to you next time. Adios.